Picture this. You're staring at your screen, finger hovering over the buy button, knowing deep down this trade violates every rule you've set for yourself. Yet something inside compels you forward, a force more powerful than logic, more urgent than strategy. That force isn't market manipulation or bad luck. It's the ancient wiring of your own mind, turning against you in the modern battlefield of trading. Stay with us. Like, subscribe, and turn on notifications. Your support helps us create and improve content. Most traders spend years hunting for the perfect indicator, the secret pattern, the holy grail setup that will finally unlock consistent profits. But here's what they miss. The market doesn't test your technical analysis. It tests your psychology. Every red candle, every missed opportunity, every winning streak that turns into a devastating loss isn't really about price action. It's about the war raging inside your head, where primitive survival instincts clash with the demands of modern trading. You see, that urge to chase a breakout, that panic when a position moves against you, that desperate need to win it all back with one big trade, none of that is really you making conscious decisions. It's your amygdala, that ancient alarm system buried deep in your brain, screaming danger signals that worked perfectly for our ancestors, but become toxic in today's markets. The professional trader sitting next to you sees the same charts, feels the same adrenaline, but responds completely differently. Not because they're smarter or have better strategies, but because they've learned to recognize and rewire these psychological patterns. They've turned their greatest enemy, their own mind, into their most powerful ally. Now, let's dive deep into this hidden battlefield and discover how you can do the same. The market didn't get easier. You became stronger. This is where the real journey begins. Not through more information, but a profound internal transformation. Welcome to the hidden battlefield behind the trading charts. The story starts with a subtle flicker, a sudden movement, an unexpected spike. You hadn't planned to trade today, but something deep inside awakens. Something primitive and ancient. A quiet voice whispers, "Don't let this opportunity slip away." You glance again. The candle is moving rapidly, green, thick, solid. Suddenly your pulse quickens. Your breathing becomes shallow. Your focus narrows into a razor-sharp tunnel. The carefully crafted plan dissolves. The system vanishes. Risks, rules, rational thinking, all disappear. Your brain shifts into a different state, no longer analytical or strategic, but purely instinctual. This is FOMO, the fear of missing out. But here's the crucial truth most traders never understand. FOMO isn't just about bad trades. It silently, gradually, permanently rewrites your entire identity. It transforms trading from a disciplined, logical practice into an emotional battlefield of impulse and regret. FOMO doesn't scream. It seduces like a skilled con artist disguised as opportunity. Its whispers are cunning. Look at that move you could have caught. This is the one, get in now. Everyone else is profiting. Why aren't you? But the real message is more insidious. If you miss this, you're nobody. If you don't act immediately, you're falling behind. So you obey, you click. Not because the setup is sound, but because the pain of being left out drowns out your logical voice. In that single moment, the damage begins. Even if the trade succeeds, you've already lost something far more valuable. Your discipline, your clarity, your competitive edge. FOMO isn't about market dynamics. It's about your desperate need to feel in control within a world constantly reminding you how little control you actually have. You scroll through social media, seeing traders post wins on Twitter, Discord, Telegram, screenshots, percentages, bold claims. They trigger a toxic urgency inside you. You believe that if you don't act now, you'll miss the wave. But the wave has already crested. You weren't early. You weren't prepared. You were simply reacting, and that's the first layer of your potential destruction. FOMO transforms you from a strategic trader into a helpless slave. Instead of leading your trades, you frantically chase them. Confirmation becomes irrelevant. You start guessing, hoping, praying. And hope, my friend, is nothing more than a desperate illusion, not a legitimate trading strategy. But the damage goes deeper. FOMO quietly erodes your confidence in subtle, insidious ways. After losing a trade, you torment yourself. I shouldn't have entered, but it looks so promising. When you win, you dismiss it as pure luck, constantly haunted by the fear of missed opportunities. Gradually, you stop trusting yourself. Your trading instincts become contaminated. Your decisions feel fragile and uncertain. Every moment you're not actively trading feels like a critical mistake. This represents the second layer of destruction. FOMO replaces strategic clarity with pure chaos. Then comes the most devastating consequence. Over time, you unconsciously develop a habit of perpetual urgency. Success becomes synonymous with speed in your mind. You start confusing mere motion with genuine progress, forgetting that exceptional traders don't chase opportunities. They patiently create them. FOMO demands that your brain believe constant trading is the only path to success. Consequently, you overtrade. You recklessly overleverage. You brazenly ignore risk. Slowly, painfully, your trading account begins to hemorrhage. This isn't from one catastrophic mistake, but from thousands of tiny betrayals of your own carefully established rules. This represents the third layer of destruction. FOMO systematically annihilates your trading future, one undisciplined trade at a time. Consider this honestly. How many trades have you executed knowing deep down you absolutely shouldn't? Be truthful. You felt that internal hesitation, that quiet whisper of doubt in your gut. Yet you entered anyway, driven by the fear of missing out, seduced by a moving chart, influenced by others' excitement. That wasn't strategy. It was fear masquerading as opportunity. Each such trade isn't merely a red number in your trading history. It's a dangerous message to your brain that impulsive behavior gets rewarded. Every time you act from FOMO and momentarily succeed, you're reinforcing the very behavior that will ultimately destroy your trading career. The fundamental truth you must internalize: the trade you miss is never as dangerous as the destructive mindset you're reinforcing. Missed opportunities don't decimate trading accounts. Compulsive behaviors do. Impatience does. Lack of self-trust does. The real cost of FOMO isn't the trade you didn't take. It's the psychological damage you inflict upon yourself with each impulsive decision. The discipline you abandon in pursuit of your goal is what truly matters. The more frantically you chase, the further you drift from becoming the type of trader who survives. Genuine traders don't chase. They sit, they stalk, they wait. They understand that the market will always present another opportunity. But capital, clarity, and mental health are finite resources. When your finger hovers over the mouse, pause and ask yourself a critical question. Am I trading according to my system, or am I desperately running from the fear of being left behind? Fear of missing out isn't a signal, it's a warning. Ignore it, and you'll lose far more than money. You'll sacrifice your edge, your identity, your self-belief, and no trading setup is worth that devastating price. Draw your line in the sand right now. From this moment forward, you will no longer trade from fear. You will stop reacting and start responding with clarity, calm, and control. The goal isn't to capture every single market move. The true objective is to become someone who doesn't feel compelled to do so. Someone immune to hype, unswayed by noise, capable of missing a trade and smiling, knowing another opportunity will emerge. This is how victory is achieved. Not by chasing more, but by requiring less. Fear of missing out destroys the impatient, while simultaneously fueling disciplined traders. You must choose. Will you be the trader frantically chasing every movement, or the one who waits and selectively takes only the trades that genuinely matter? The market observes you, but your future self is the most critical witness. The scenario always unfolds identically. You've been patient, watching the chart compress like a coiled spring, flat, tight, sideways, day after day. No movement, no action, just pure potential silently building. You reassure yourself, when it moves, I'll be prepared. But then it happens and something fundamental shifts within you. You blink, you hesitate, and then you chase. Initially, it's barely perceptible. A candle breaks through resistance. Volume surges. Momentum accelerates. The price leaps rapidly. 10 pips. 20. 40. You weren't positioned to benefit. You missed the initial surge. But it continues climbing. Suddenly, your brain erupts with panic. This is the moment. It's breaking out. Everyone is buying. You cannot miss this. You reflexively open Twitter. Rocket emojis flood your feed. Someone just earned $2,000 in 3 breathless minutes. Another trader claims it's heading straight to the moon. A deep primal urgency rises within you. Strategy vanishes. This is now about identity. Risk and reward fade from consideration. You're no longer asking about stop levels or trade setups. Instead, a single thought consumes you. What if this move rockets without me? So you click. Not because it's a rational trade, but because the prospect of being left behind is unbearable. You've just entered the jaws of the breakout beast, the first manifestation of FOMO, and potentially the most dangerous. On the surface, it appears to be opportunity. It looks like momentum. It sounds like victory. But beneath this facade lies pure panic. Disguised by a veneer of confidence, let's be brutally honest. Most breakout trades, those that seem obvious, explosive, and safe, actually fail. 73% to be precise. Why? Because by the time the opportunity looks crystal clear, you're already too late. Clean follow-through breakouts are rare. False breakouts, however, are everywhere. The reason is simple. Smart money, institutions, whales, algorithms understands human psychology perfectly. They know exactly when your emotions will trigger. They recognize precisely the moment a chart starts looking bullish. And that's where they strategically position themselves. They bait you with momentum, then reverse with surgical precision. They sell directly into your fear of missing out. You're not buying strength. You're buying their exit strategy. You haven't entered with conviction, but with pure urgency. And urgency is the antithesis of trading edge. This wasn't a planned trade. You didn't wait for confirmation. You didn't define risk parameters. You simply reacted to movement, propelled by the collective momentum of others. But the market doesn't reward emotion. It punishes it mercilessly. Beneath the surface, a neurochemical drama unfolds. When a breakout appears, your brain floods with dopamine, excitement, anticipation, euphoria. Then, cortisol surges. Stress overwhelms you. Your heart races. Breathing quickens. Logical thinking evaporates. You're no longer in trading mode. You're in pure survival mode. And in survival mode, you don't think, you react. But every reaction trade is a coin flip at best, a potential catastrophe at worst. And you're not just risking money. You're gambling with something far more valuable. Trust in yourself. Because after a loss, you start tearing yourself apart. I knew better. Why did I jump in? Why do I keep doing this? It gnaws at your confidence, erodes your clarity, strips away your sense of control, and now, even with a solid setup, you hesitate. You hesitate because the last time you acted, it wasn't truly you. It was fear wearing your skin. And maybe the breakout works sometimes. Maybe it does keep running, but that's the most dangerous outcome possible. Because now your brain links that momentum to a destructive pattern, and the next time, you'll repeat it again and again until the loss becomes too massive to recover from. So, what's the solution? It's not about avoiding breakouts forever. Some are legitimate, some offer genuine opportunities. But the critical question isn't whether something is moving. The real question is, am I chasing? Am I operating from process or panic? Did I witness this setup develop over time? Or did I leap in because a green candle triggered my fear? Did I define my risk before entering? Or am I blindly trusting momentum to rescue me? Here's the fundamental truth. The best breakouts don't feel exciting. They feel mundane, predictable, meticulously planned. The ones that make you feel like you're about to miss something enormous, those are almost always a trap. The breakout beast is cunning. It conceals itself behind urgency. It thrives on fear of missing out. It devours traders who can't remain still. But you're not here to react. You're here to grow. You're not a prisoner of the market's rhythm. You establish your own tempo. You're not attempting to capture every single movement. You're waiting for the move that naturally approaches you. Because the market doesn't reward speed. It rewards clarity, preparation, control. And when you can look at a breakout without feeling compelled to chase it, that's true freedom. That's when the beast loses its power. That's when authentic trading begins. It starts with a signal. Your phone vibrates, a red banner appears. Breaking news. Unexpected market shift. Federal announcement. Jobs report surprises. A massive crypto purchase. You freeze. Your eyes scan the text. Your mind races. You pull up the chart. A massive candle has already formed. The market has made its move. A sudden thought seizes your mind. Don't miss this. You sprint to your terminal. USD has spiked 200 pips. Bitcoin jumps 4% in just 10 minutes. Gold violently reverses. Panic grips you. You click market buy. You convince yourself you're being decisive. You're acting on information. But within minutes, the chart turns. Momentum dissolves. You're trapped at the peak. Once again, another trade goes wrong. Another loss from chasing headlines. Another wound to your confidence. This is the news nightmare. FOMO's second face. And it's far more dangerous than you realize. Unlike social media hype or revenge trades, this feels intelligent. It feels responsible. You rationalize, I'm responding to fundamentals. I'm trading like a professional. This is what real traders do, right? But it's a lie. A beautiful, believable, dangerous lie. Here's the unpalatable truth. By the time you read the news, the market already knew. Institutions captured it 0.3 seconds before you. Through fiber optic lines, co-location servers, and machine learning algorithms, they positioned themselves before the release. They reacted before the spike. They executed before your screen even updated. You're not reacting to breaking news. You're responding to the aftermath of a trade already completed. The cruel irony? The chart still appears alive. The candle continues pushing. Volume keeps rising. But beneath the surface, big money is exiting. They're unloading while you're buying in. Because you just received the news. They've already traded it. You're not entering a move. You're funding their profits. Reflect. How many times have you bought a spike after a major announcement only to watch it reverse within minutes? How often have you felt you were doing the right thing, staying informed, being proactive, only to end the day in red, bewildered, and frustrated? How many times did you tell yourself, next time, I'll react faster, next time, I'll be early? But the system isn't designed for you to win this race. You're not even on the same track. You're playing on a deliberate delay. Why do you really chase the news? It's not about gaining an advantage. The truth is, you're seeking certainty. In a world filled with uncertainties, news feels like a solid anchor, concrete, verified, official. It provides something to hold on to, a rationale for action, an excuse to break your own rules. But here's the hidden contradiction. The more obvious the news appears, the more likely it's already factored into market movements. Markets don't react to what just happened. They move based on expectations and how reality compares to those predictions. And even then, institutional players are light years ahead. They don't simply respond to headlines. They anticipate them. They create hedges. They manipulate the system. You're stuck trying to interpret information that's already been weaponized against you. This is the psychological trap of the news cycle. It hijacks your reasoning by disguising urgency as intelligence. It convinces you that failing to react immediately means falling behind. It creates an illusion that you must act right now, that your opportunity is vanishing. But pause and reflect. When was the last time reacting to news consistently generated reliable profits? Precisely. The problem isn't the news itself. It's your response to it. True professionals operate differently. They don't panic when headlines break. They don't chase sudden price spikes. They don't guess market direction. They don't rely on gut feelings. Instead, they plan. They position themselves strategically in advance, or they wait for turbulence to subside, understanding that volatility is where amateurs get rich in fantasy and go broke in reality. The news nightmare grows even more insidious. Each time you chase a news-driven market movement and lose, your brain gets punished. But instead of learning, it rationalizes. It whispers that you were just late, that you should have acted faster, that the next opportunity will work. So you continue chasing, continually convincing yourself that the right headline will be your breakthrough. But it never is, because the system isn't malfunctioning. It's functioning exactly as designed. It exploits your psychology, targeting your desire to be right, your fear of missing out, your desperate need for control. Trading isn't about understanding current events. It's about recognizing critical moments. Most of the time, nothing significant happens. The best trades don't occur immediately when news breaks. They emerge after everything calms down. Once the initial spike fades and the chart returns to its rational state, clarity appears. That's when structure reasserts itself. That's precisely when professional traders make their moves. When your screen suddenly illuminates with breaking news, take a deep breath. Create distance. Reflect on whether you're truly following your trading system or simply attempting to manufacture a sense of control over something fundamentally uncontrollable. Your true advantage isn't about responding faster than algorithmic systems. It's about refusing to engage in their high-speed game. Your edge lies in patience, careful preparation, and understanding precisely when not to trade. Paradoxically, this restraint might represent your most financially rewarding decision. You hadn't planned on entering any trades today. You'd committed to staying on the sidelines, no potential setups, no signals, no distractions. Then you checked your phone, and there it was. A tweet, a screenshot, a bold headline that strikes with visceral impact. Someone claims $1,180 profit in just 12 minutes. Pepe is launched. Potential 100x return promised. You hesitate. You weren't even tracking Pepe. You don't even know what Pepe represents. Yet, your mind starts spinning. What if it genuinely reaches 100x? What if this is the opportunity you'll miss? Suddenly, you've drifted from your carefully established lane. You're no longer calm, no longer disciplined, no longer yourself. You've been drawn into an alternate reality, pulled into social media's seductive narrative. This represents FOMO's most compelling manifestation. It doesn't merely display charts or trading signals, it offers something more profound: validation, a sense of belonging, a promise of status. In that critical moment, the real transaction transcends mere price movements or technical setups. It becomes about personal identity. You're not truly afraid of missing potential profits. You're terrified of missing what those profits symbolize: proof of your intelligence, confirmation of your belonging among winners, validation that you matter. But here's the unvarnished truth few discuss. Most online content represents a carefully curated illusion, selectively presented, dramatically enhanced, sometimes completely fabricated. These narratives conveniently omit the losses. They never reveal the emotional toll, the sleepless nights of anxiety and uncertainty. They conceal the failed trades, presenting only the victories immediately after their entry. Just before triggering your fear of missing out, they strategically position themselves. These flashy announcements come after they've already quietly entered, often through exclusive paid groups or private chats. The influencers first secure their positions in silence, then go public with dramatic flair. They post tweets adorned with rocket emojis, whale alerts, and bold captions screaming, "I'm all in, are you?" Thousands of traders then rush in blindly, driven by emotion and arriving too late. For the influencer, this surge of attention serves as their exit strategy. They don't need to be correct. They simply need your belief. And you believe, swayed by likes, retweets, and adoring comments calling them legends and goats. You assume that if everyone else is participating, they can't all be wrong. But they can be. And they are. Trading isn't a popularity contest or a group project. When prices drop, those likes won't refund your losses. That guru won't cover your margin call. Those anonymous accounts will disappear before you can even finish expressing your frustration. The real cost extends beyond money. It damages your mindset. Each time you chase a trade based on someone else's recommendation, you train your brain to abandon its own process. Every instance of trusting a stranger more than your personal plan erodes your trading identity. The damage accumulates gradually, over weeks, over months, until one day you no longer trust yourself. Your mornings now begin with Twitter instead of charts or strategies. You wait for someone else's signal. Their confidence becomes your fuel. Their trades become your navigation. Worst of all, you relinquish personal responsibility. When trades fail, you blame them. When trades succeed, you believe you need them. You become dependent, addicted to voices that don't even know your name. This is the antithesis of freedom. Let's be clear. Social media isn't designed to help you win. It's engineered to keep you engaged, emotional, and reactive. It's not constructed for clarity. The system is designed to provoke stimulation, and stimulation systematically destroys discipline. With each piece of noise you consume, you progressively reduce the space reserved for your own authentic voice. The most successful traders understand that they don't require additional opinions. What they truly need is silence. You must confront a critical question. Are you genuinely executing your trading plan, or are you merely pursuing someone else's manufactured dream? Can you honestly recall the last time you executed a trade purely based on your personal conviction, your meticulously developed system, your rational logic, and precise timing? Or have you completely surrendered your entire mental framework to an anonymous stranger sporting a blue verification badge and an inflated ego? Here's the unvarnished truth. That influencer doesn't genuinely care about your success. Their primary concern is engagement, likes, retweets, comments. They're focused on viral screenshots. If your financial loss inadvertently fuels their next victory, they'll accept that consequence without hesitation. But you're pursuing something far more profound. This isn't just about money. You're seeking mastery, control, genuine freedom. You'll never discover those objectives by mimicking another person's journey. You must forge your own path. You must learn to filter the noise, disconnect from the hype, detach from the spectacle. Remember why you initially started trading? Not to impress strangers, but to construct a life entirely on your own terms. It carries something far more treacherous: a wounded ego. You rush into the next trade prematurely. Your analysis lacks depth, but your emotions are razor sharp. You assess the setup not because it merits attention, but because the previous loss demands retribution. The trading process no longer matters. Revenge is your sole motivation. Here's the stark reality. The market remains oblivious to your loss and harbors no sympathy. Yet you behave as if it comprehends your pain, as if it owes you compensation. You believe that by pushing harder, trading faster, risking more, you'll somehow restore balance. But this isn't justice. It's self-destruction masquerading as redemption. What you're truly attempting to repair isn't your financial account, but your sense of control. The revenge mechanism thrives on this delusion, the belief that you can forcibly reclaim your losses, outmaneuver your pain, neutralize your regret through sheer willpower. This belief is toxic, replacing rational analysis with raw emotion, disciplined risk management with impulsive actions, calculated patience with frantic desperation. Your focus has shifted. You're no longer evaluating trade potential objectively. Instead, you're consumed by a singular desperate thought: I just need this one trade to win. The market, however, shows no mercy to desperation. It punishes such emotional trading with ruthless efficiency. When you exponentially increase your position size after a loss, you're not just amplifying the trade, you're magnifying your vulnerability. The typical progression is predictable. A small initial loss triggers an oversized compensatory trade. When that trade turns negative, you compound your position. Suddenly, you're over-leveraged, stress escalates, mental clarity evaporates, and you gamble everything on one final, reckless move. In an instant, a momentary setback transforms into a completely decimated account. This catastrophic outcome isn't due to a flawed trading strategy, but because your psychological identity crumbled under pressure. The damage extends beyond financial loss. Your self-trust becomes the real casualty. In the aftermath, you're left with haunting, soul-searching questions. Why did I act so irrationally? What fundamental weakness drove my decisions? How did I surrender control so completely? These aren't mere trading technical issues. They're profound emotional wounds that the revenge mechanism ensures remain raw and unhealed. The uncomfortable truth is that revenge trading transcends market mechanics. It's a deeply personal battle about self-worth. You're not simply attempting to recover monetary losses. You're fighting to restore something far more intangible and fragile. You're attempting to reclaim a version of yourself that felt capable and in control. But forceful recovery isn't possible. Rebuilding requires discipline, and discipline doesn't emerge from intensifying efforts. It comes from stepping back, Every trader experiences losses, even the most skilled. What distinguishes the elite from the emotional is their response. Elite traders don't chase losses. They accept them, analyze them, learn from them, and then wait. They give themselves space to reset, to cool down, to return with clarity. They understand a crucial truth you must now accept. Not every moment demands trading action. Sometimes the most profitable decision is inaction. Walking away, journaling, going outside, experiencing the loss without immediate correction. True trading power isn't market control. It's self-control. Next time you lose, and that inner voice demands immediate recovery, recognize it. Don't see it as truth or urgency, but as a destructive impulse trying to hijack your process. You don't owe the market an immediate response. You don't need to restore dignity through risky trades. Your priorities are protecting capital and, more critically, protecting your mental state. Your new rule is absolute. One loss means full stop. No re-entry, no revenge, no exceptions. You're not here seeking redemption. You're building consistency. And consistency isn't emotional. It's constructed through repetition, logic, and protective rituals. If you ever forget this, remember, one moment of anger can unravel months of progress. One revenge trade can demolish confidence. One impulsive decision can derail a year of growth. But one pause, one breath, one deliberate stop can also break the destructive cycle. So breathe, detach, reset. Not from weakness, but from the strength to resist immediate emotional response. You're not a gambler, victim, or robot. You're a professional. Professionals don't seek revenge. They pursue mastery. And you've just done everything correctly. You waited, you analyzed. You entered the trade with precision and calm, following your strategy perfectly. The market moves in your favor, and suddenly you're seeing green. A moment of pure trading validation. But then something internal shifts. A subtle tension builds in your chest. A whispered warning rising from deep within. Take profits now, the voice says. The price ticks up another point, and your unrealized gains look better than they have in weeks. You watch intently, fixating on the numbers, your fingers twitching. Then you close the trade, locking in the profit, exhaling with momentary relief. But when you look back at the chart, you see it continuing to climb, exactly where you predicted it would go. Now you're on the sidelines, watching the missed opportunity, frustration building, and then, despite every promise you've made to yourself, you do it. You re-enter at the top, driven by pure emotion. Immediately, the chart turns against you. It pulls back, dipping lower and lower. Panic sets in. You exit again, losing not just the new potential profit, but creating an additional loss. One thought echoes in your mind. What just happened? You've just encountered the most insidious trading demon, the exit executioner. He's cunning because he doesn't attack you during bad trades. Instead, he waits until you've done everything right. He lets you find a solid trade, lets you feel like a professional trader, and then, at the moment of your greatest potential, he whispers his poisonous lie. You're about to lose everything. This monster doesn't feed on the fear of losing, but on the fear of losing what you've already gained. It's the terror of watching a profitable trade turn red, the dread of giving back hard-earned gains, the anxiety of being almost right but ultimately failing. To protect yourself from this potential pain, you sabotage your own trade. You exit early, not because of your plan, not because you've hit your target, not because the market structure has changed, but because you cannot tolerate uncertainty. The exit executioner's true power lies in making you mistake discomfort for genuine danger. Every successful trade triggers an immediate reaction. Exit now, take the profit, don't get greedy. But it's not greed driving you. It's something deeper. It's fear. Fear of watching profits disappear. Fear of being wrong again. Fear of reliving past pain. Here's the harsh reality. When fear dictates your exit, you destroy your trading edge. Your system might win 60% of the time, but only if you allow winners to run. Your risk reward could be 1 or 3, but only if you don't cut trades short out of fear. You're not just trimming a trade, you're limiting your future potential. Consistent profit isn't about being right constantly. It's about being right enough and letting those successful trades compensate for the others. Each premature exit is like withdrawing from your growth account. And every time you close early, then watch the price hit your original target, you reinforce a toxic self-message, I don't trust myself. Think about that. The exit executioner isn't just stealing profits. He's stealing your belief in your strategy, in your process, in your ability to let go and allow trades to develop. Over time, this creates a destructive cycle. Close early, miss the real move, feel regret, re-enter emotionally, get punished, stop trusting yourself, then repeat. This isn't trading anymore. It's emotional trauma in motion. Breaking this cycle requires a different approach. You don't try to feel better or silence the inner voice. Instead, you build rules that speak louder. Rules like no exit before target or structure break, no emotional re-entry after closing, make exit decisions before entering. Most critically, stop measuring success in dollars. Start measuring it in discipline. Profit isn't the goal, discipline is. Profit emerges as discipline's byproduct. Trust grows like compound interest, accumulated through thousands of disciplined decisions. Next time you're in profit and feel that anxious voice rising, pause. Breathe. Ask yourself, am I exiting from strength or fear? If it's fear, you're not protecting gains. You're protecting your comfort zone, the very zone that's been keeping you small. Let your winners run, not out of greed, but because you finally gained the strength to allow probability to unfold naturally. Give your strategy room to breathe. Let the market perform its function. Release control and reclaim your power. True traders don't panic and exit profitable positions. They ride the movement with patience and calm. You didn't come this far to bail out early. You arrived to master this craft, and mastery doesn't waver when the trade is progressing. It follows through completely. You hadn't planned to trade today. No setup existed, no signal appeared, no clear edge was present. You had told yourself this was a day for rest, for observation, for staying on the sidelines. Yet somehow you find yourself here again, staring at the screen, chart open, finger hovering near the execution button. You can't even explain why. No excitement courses through you. No confidence drives you. No preparation supports you. But something pulls at you. A tension, a craving, an undefined sensation. In this moment, it's not about the trade itself. It's about the feeling, the surge, the potential, the illusion of control. This is addiction, but not in the conventional sense. Not substance-related, not traditional gambling. This is a dopamine loop, a neurological hijacking, a behavioral compulsion emerging from the brain's most potent chemical. The time has come to confront reality. You're not simply trading for financial gain. You're trading for stimulation. Consider the scientific perspective. Every trade you execute, regardless of outcome, triggers a dopamine release. This identical chemical drives slot machines, social media engagement, and substance dependency. What makes this mechanism so insidious is dopamine's unique reward system. It doesn't celebrate outcomes, it celebrates anticipation. That instant before clicking, when the candle begins forming, That moment, the position becomes live and infinite possibilities exist. That's what your brain truly desires. Not profit, not discipline, just the rush. You believe you're making rational decisions, but you're actually running a programmed sequence, a habit loop etched into neural pathways. Trigger, urge, action, reward, repeat. Each time you feed this loop, it becomes more entrenched. You're not trading through logic. You're trading to satisfy a chemical dependency. And the most troubling part? You remain completely unaware. Addiction doesn't always look like destruction. It can masquerade as productivity, passion, and dedication. You tell yourself you're grinding, mastering your craft, staying sharp. But deep down, you know you're just clicking buttons to feel something because real life seems bland in comparison. Breakfast becomes a time to check charts. Work turns into a space for sneaking trades. Nights are spent watching 5-minute candles instead of sleeping. When you're not trading, your mind is consumed, planning the next move, replaying past losses, imagining alternate scenarios. You're no longer living your life. You're living inside the market. This is the hidden prison. It's not about blown accounts, margin calls, or even losses. The real imprisonment happens when you can't stop, even when you want to. You trade when you know today isn't your day. You increase position sizes despite being emotional. You enter trades when you're off your edge, unable to stay out of the game. Money becomes secondary. It's about identity now. Who are you when you're not chasing the next trade? What fills the void when numbers stop moving? For many traders, the answer is terrifying. Nothing. So they continue trading. Not from conviction, but from avoidance. Avoiding stillness. Avoiding reflection. Avoiding the discomfort of confronting themselves. Trading transforms into a drug, offering relief from boredom, loneliness, unmet goals, and shattered dreams. But relief isn't freedom. Relief is temporary. Freedom is enduring. Breaking free isn't about quitting trading. It's about reclaiming your mind, recognizing the addiction, seeing your behavior without judgment, but with brutal honesty. Challenging questions emerge. Do you trade to escape or to express skill? Do you feel restless outside the market? Are you entering trades just to feel something, not because of a genuine setup? These questions aren't comfortable, but they're essential. Mastery begins with awareness. You need structure, time away from screens, scheduled sessions, not compulsive clicking, journals alongside charts, rules instead of reactions. Here's the rewritten fragment maintaining the original's essence and style. The true power lies in stillness, learning to sit with your urges and watch them pass without action. Imagine facing your trading screens, seeing a chart move, feeling that familiar hunger rise, and consciously choosing not to react. That's when you realize you're no longer trading to feel alive, but trading because you're alive. The market will always exist, but your inner peace requires protection. This moment demands a critical question. Are you here to gamble your sanity or construct a lasting legacy? Breaking the dopamine loop and reclaiming the silence between market candles is your path to genuine control. When you master this, you stop chasing fleeting highs and start building something unshakable. Trading transforms from a compulsive behavior to a refined craft. You recognize the sensation, a sudden price spike, candles stretching, tweets flooding in, your screen illuminating and simultaneously triggering your entire nervous system. Your heart races, hands tremble, mind spirals. This doesn't feel like opportunity. It feels like pure urgency. The internal dialogue emerges. If I don't take this now, I'll regret it. You enter not from conviction, but from fear. Classic FOMO. This isn't merely a trading problem. It's fundamentally human. Without a robust mental defense system, you'll perpetually remain a victim of momentary impulses. The market moves swiftly, but your worst decisions happen even faster. These choices aren't strategic. They're survival mechanisms. Yet you weren't destined to merely survive this game. You were meant to master it. Mastery demands structure, not more technical indicators, signals, or alerts. It requires a mental operating system, a personal protocol that keeps you grounded amid chaos. FOMO isn't something you outgrow. It's a daily battle you must train against. You need tools. You need a system. The goal is clear. Construct an anti-FOMO framework, a set of principles and mental anchors preventing self-destruction when market storms inevitably arrive. Your first step is simple yet profound. Define your edge, then ruthlessly eliminate everything else. Understanding FOMO starts with recognizing its root cause. Traders often chase opportunities because they lack a clear trading strategy. Without a well-defined edge, every market movement appears to be a potential trade, and each missed moment feels like a lost chance. However, when your trading system is precisely outlined, you become immune to market noise. Instead, you wait patiently and act only when your predefined rules signal an opportunity. The first step is establishing absolute clarity. Document your specific entry triggers, preferred trading timeframes, and precise conditions for avoiding trades. Clarity serves as your primary defense against impulsive decisions. Everything else is merely a distraction that can derail your strategy. Next, develop a stop protocol to counteract emotional impulses. When FOMO intensifies, rational thinking collapses. You need an automatic reflex, not an emotional reaction. Whenever you feel an urge to enter a trade impulsively, physically step away from your screen for 1 to 2 minutes. Take deep, controlled breaths. Inhale for 4 counts, exhale for 6. Observe the underlying trigger of your impulse. Was it a sudden price spike, a provocative tweet, or a recent loss? Only proceed if the setup perfectly matches your established rules. Creating a FOMO journal becomes crucial for personal growth. Most traders only record trade outcomes, but true development happens by tracking emotional impulses. Log when FOMO strikes, your thought process, whether you acted on it, and why. Reflect on what the ideal version of yourself would have done. This approach transforms you from a mere trader to a student of your own psychological patterns. Intentionally build delays into your trading system. FOMO thrives on rapid, unthinking actions. It wants you to trade before thinking or feeling. Implement a mandatory waiting period. No trade enters without 60 seconds of careful reflection. If you feel urgent, you must walk away before executing any action. This pause interrupts the impulsive cycle and allows logical thinking to reassert control. Finally, develop a ritualized exit strategy. FOMO doesn't just affect entries, it also disrupts exits. Traders often close positions too early, re-enter at inappropriate times, or overstay trades due to fear of losing gains. By establishing a structured exit protocol, you protect yourself from these emotional pitfalls and maintain disciplined trading behavior. Stop being afraid of missing out on what's still running. Instead of deciding exits in real time, determine them before you enter the trade. Set clear rules. Take profit at a specific point. Move your stop only at a designated level. And commit to not re-entering a bad trade today. Establish rituals that replace reactive impulses and protect your trading edge. Now it's time for the identity check. Understand that FOMO doesn't attack your screen. It attacks your core identity. It whispers that missing this trade means falling behind, that not acting makes you less of a trader, that waiting will lead to regret. But the truth is different. You don't trade to impress or chase. You trade to build something meaningful. Every morning, ask yourself a critical question. Who am I becoming today? Am I a gambler, a follower, or a calm, clear-minded operator? This question is transformative because identity drives behavior. Once you stop acting like a chaser, you cease being one. Create a trading mantra to silence fear. When doubt creeps in, you need a stronger internal voice. Craft a short, powerful statement that brings you back to your center. Examples include, I don't chase, I execute, or, if it's not in my plan, it doesn't exist. Repeat this mantra daily, out loud, before every trading session. Repetition reprograms belief, and belief reprograms behavior. This is your system, a shield, a structure, a compass in the market's storm. You'll still feel FOMO, but it won't control you. You'll see market spikes without chasing them. You'll feel urges, but know exactly how to handle them. You're not here to trade like everyone else. You're here to rise above your instincts, to train your mind, to master your behavior. Your goal is to become a trader the market can't shake. And that journey begins the moment you stop reacting and start executing with purpose. Let's be honest. Most traders aren't losing because they lack discipline. They're losing because they're delusional. They believe trading is about being right every time, about catching every big move, about perfectly timing tops and bottoms. This belief isn't just wrong, it's dangerous. Trading isn't a game of perfection, it's a game of probabilities. Until you learn to view trading through mathematical probabilities instead of emotions, you'll constantly feel like you're battling the market. But in truth, you're battling yourself. Let's understand this clearly. Profit isn't about luck or market intuition, or being more intelligent than other traders. Profit is mathematical consistency over extended periods. It's about accumulating small advantages across hundreds of trades. It's about eliminating randomness through structured rules. It's about approaching trading as a disciplined business, not a random gamble. And this business operates on one fundamental principle: mathematics. Consider a practical scenario. You have a trading system with a 50% win rate. When successful, you earn $2. When unsuccessful, you lose $1. After 100 trades, you'll win 50 times, generating 100. You'll lose 50 times, losing $50. Your net profit, $50. This result isn't spectacular or viral, but it's reliable, repeatable, and scalable. That's the pure mathematics of profit. Compare this with emotional trading, getting angry and increasing position sizes, exiting trades prematurely out of fear, seeking revenge after losses, skipping promising setups due to doubt, and entering poor trades out of boredom. This isn't trading. It's emotional roulette. You might occasionally score big wins, but over time, you'll steadily lose money. Because emotions fundamentally destroy mathematical precision. The ironic truth is that most traders don't need a superior strategy. They need to stop sabotaging their existing approach. If your system dictates risking 1% per trade, targeting a 2-to-1 reward ratio, and trading only high-quality setups, and you follow these rules religiously, you don't need to be correct every time. You simply need to show up consistently, remain calm, and allow mathematical probabilities to work. But most traders refuse to do this. They override their systems, introduce emotional interference, and then claim the strategy doesn't work. Yet the problem isn't the system. It's the trader's lack of discipline. You need to avoid losing a lot on bad trades. That's the math no one wants to talk about. Because it's not sexy to say, I took a 1% loss with full discipline. I sat out 3 days and protected my capital. I closed the trade early because the setup changed. But those decisions, that's what builds longevity. That's what builds compoundable confidence and eventually compoundable capital. You want to grow fast, slow down. You want bigger profits, take smaller, smarter risks. Because the market doesn't reward speed. It rewards patience. It rewards logic. It rewards those who understand the numbers behind the game, and the number that matters most is risk to reward. Not win rate, not gut feel. Not whether you caught the big breakout, just this. How much do you make when you're right? How much do you lose when you're wrong? Master that and you can be wrong 60% of the time and still make money. Let that sink in. You can be wrong more than you're right and still win. That's the paradox of profit. But only if you let the math work. Only if you stop interfering. Stop overtrading. Stop doubling down on emotion. Your edge is fragile, and every emotional trade breaks the math. Every time you ignore your stop loss, move your target, increase your lot size out of frustration, you're not just breaking rules, you're breaking the very logic that protects you. So here's the real question. Do you want to feel good in the moment, or do you want to win in the long run? Because they rarely go together. The moments that feel the worst, cutting a loss, missing a move, not trading at all, are often the moments that protect your equity curve. And the moments that feel the best, doubling down, chasing green candles, following social media hype, are often the ones that destroy it. Your brain isn't wired for this game, but your rules are. So trust the rules. Trading is math wrapped in emotion. Your job is to strip away the emotion and let the math speak. Because math is the only truth in the market. Everything else is noise. So the next time you feel the urge to override your system, to chase, to act from fear, remember this. The market doesn't care about how you feel. It only pays you for how you think. And thinking in probabilities, executing with discipline, and letting small edges compound, that's not just trading. That's professionalism. And that is where real profit begins. If you made it this far, you already know this isn't just about trading. It's about who you become in the process. Because the charts don't lie, but they do reflect your fears, your habits, your beliefs. And the deeper you go into yourself, the clearer the market becomes. So, if this struck a chord, if it exposed a pattern you've been ignoring, don't just click away. Sit with it. Reflect on it. Choose one insight and apply it. Imperfectly, but intentionally. That's how transformation begins. And if you're ready to keep growing steadily, mindfully, strategically, then remember this. Trading doesn't get easier, but you can get stronger. One trade, one breath, one decision at a time. Don't forget to like, subscribe, and tell us in the comments how you're learning to care for yourself. Your words might inspire others.